Good afternoon, good morning, and good evening, everybody on the Smoking Barrel Nation. I'm Rustin Edwards up in Antwerp, Belgium, with my illustrious co-host in sunny Dubai.
Hello.
Where's it
Been a
rainy?
while, isn't it? It's been like 3 weeks. I feel like I haven't stopped, and it's just like it's great. I mean, I would say the word COVID is like COVID. What was that? Because the world is back, fully back.
Is a COVID is something that you do when you see two videos at the same time? That's called
I
a
think
COVID.
it's, it's something like that. But it's just amazing how quickly 2020. I don't even want to break down the years because 2020 was mad. 2021 was mad because everyone was like, right, I don't care what I do or how much money I spend. Um, after COVID. 2022, everyone went, shit, maybe I spent a bit too much money. 2023, governments went, oh, you're going to pay for it now. Interest rates, bosh. 2024 has kind of been like, everything's back to normal. Arsenal top of the league, everything's back to normal.
Well, I think that's an abnormal aberration of Arsenal being on top of the league, but we can discuss that at a later date. Uh,
Look, I don't want to talk about it. We're just about top of the league. It's the end of March, well, 19th of March. Anyway, hello everyone. Ramadan Kareem to all those celebrating. Nice to see everyone in London during IP week. I didn't see as many people as I wanted to, but it's a bit poorly. It's a bit ridiculous, really. It was so cold. I just immediately my body went, yeah, you're gonna have a cold now. And that's it. Right, see ya. And then I was here for a week. I was in Singapore last week. It was very nice to see my friends over in Southeast Asia. That was nice. And now I'm here for a couple of weeks before Eid starts. And then, yeah, let's wait and see.
Yeah, well, I mean that's the going into the spring season. We've got all the conferences kicking off as well, so it's that time of year. If things are getting warmer, people looking to travel, people are breaking out. Crude oil broke out. Speaking of breakouts,
Yeah,
it broke out of the 81, 82, 73 type range, and heading up to a potential price target of 88.07 on the technical charts. So a lot of things on the geopolitical side of the fence pushing markets higher. I can't say it's anything else other than geopolitical at this point, because it is a combination of a lot of factors putting the risk premium back into crude, or at least putting energy risk back into the framework. You couple that with the fundamental side of refineries coming out of turnaround, and you've got a potent potable there of price action.
yeah. Look, just before we start on Brent breaking out, I think you're right. You know, the circus has moved to Houston this week with Sarah Week in Houston. I just want to touch. It's probably going to be my quote of the year, and I hope Greta, if you're listening, because I know you're a long time fan and big subscriber. If you're not, like, comment, subscribe, people. Um, Saudi Aramco's CEO Amin Nasser said Monday that the energy transition is failing and policymakers should abandon the fantasy of phasing out oil and gas. Can you imagine people pow, pow, whooping up the Stetsons all over Houston?
To me, that's a case of a trader talking his own book.
He is well within his right. Arguably,
Yes.
they announced their figures for 2023, which was like $100 billion profit, only 100. My heart bleeds. But I think it's it's a difficult one because before we move on to flat price and it breaking out of the boring range it has been, it's an important point because, okay, sensationalism aside, i.e. getting a headline out there and, the arguably the probably the biggest aggregation of CEOs in one room is probably Sarah Week. Adipak isn't far behind. It's in Abu Dhabi, a lot of people get together. Sorry,
Dav-
mate.
Davos is probably the only other place where you get that many people in the C-suite together.
Yeah, probably. But it's an important week, and I think that the energy transition, what's happened over the last couple of years, especially 2 years ago, where energy security wasn't really prior Russia's invasion of Ukraine, energy security wasn't really a discussion point as such. Energy security was to a point when you're talking about, say, some European nations who are net importers. But, the transition strategy, what's happening, the sort of green agenda going forward, holding hands with fossil fuel burning right now that the world needs. I don't know. Eventually it has to sort of acknowledge, they have to acknowledge each other, which they have. I know we've just had COP28 in Abu Dhabi, where the world decided that eventually we would all get together and work out a plan how to phase out fossil fuels. Very nice. But in the meantime, unfortunately, fossil fuels is very much part of the roadmap when it comes to energy burning.
Well,
So
and I think it's a case that, politicians probably got a bit out over in front of their skis, to put a good Alpine term in there. Because when you think about energy transition, it is a transition. It's not like we're going to flip a switch tomorrow and shut off petroleum use. So even the statement from the CEO of Saudi Aramco is a bit bombastic because energy demand, petroleum is going to be consumed well into 2050, 2060.
yeah,
Not going to go to zero. It's going to decline. It is going to be reduced, but it's still going to be there because until technology comes together, which can actually use some of these alternative fuels in the main mode of transportation where a vast majority of petroleum is consumed. So until you get that technology advancement to where you have replacement, the ability to replace petroleum with other fuels,
yeah.
petroleum has to be part of the mix. And even then, when you start looking at some of the new ideas around ammonia and hydrogen, you still have to use petroleum as a pilot fuel to ignite the ammonia and the hydrogen in order to get the right combustion. And so there's a lot of technology that still has to get developed in order to make a transition happen. And again, it is energy transition, not energy finale.
No,
Uh,
no,
so
I agree with that. I
anybody
just
anybody who thinks that, I always laugh at some of the commentary when somebody says, "Oh my God, look at this windmill that caught fire. Oh my God, that wind turbine. Oh my God, that's so horrible. See, we shouldn't be doing this." Well, yeah, we should be doing it. It's good for the environment. I mean, I like clean air. I think everybody else likes to be able to breathe clean air. I think I like the fact that I can walk through my village and I don't have to worry about getting soot in my hand from people burning dirty diesel. So I think there's been a lot of good that's happened throughout the environmental regulation and the energy transition. And it's been something that's been going on. It hasn't just started. It's something that has been going on for the last 15 years, 20 years.
yes,
You look at
yeah.
the amount of regulations that have come in to start re-regulating and reducing the amount of pollutants and a lot of emissions that people used to burn back in the 1980s. You don't burn them today.
No, I agree. And look, I know I'm being somewhat facetious there for the point of starting an argument with you for the sake of this podcast. But you're right. Is that, yeah, okay. The initial headline grabs you, that it's somewhat delusional the way that people see it phasing out fossil. I agree. But to just put it into context, you said that the last 15 years people have started, and you're right. And to be fair, Amin Nasser, the CEO of Saudi Aramco, said efficiency improvements alone after the past 15 years have reduced global energy demand by almost 90 million barrels per day oil equivalent, right? I, I think that probably needs checking, if I'm honest. Like with
I
all res-
agree. That seems to be a very large number.
Yeah, I just point of order. I just want to say that maybe that needs checking, maybe. But he said wind and solar, meanwhile, have substituted only 15 million barrels over the same period. I don't know whether that means I can't. It's not 90 million barrels per day oil equivalent. Anyway. Look, don't check me. Check CNBC. They're the ones who quoted it. All right, not me. Not the smoking barrel. Aramco, park your legal lawsuits elsewhere. No, everyone's a friend here. But it's a conversation that's happening. Some people are obviously a lot more defensive than others. And COP last year, when it was over, it was over. Nothing has been spoken about since. Everyone spoke about how much of a good thing it was, and all the sort of commotion around an oil producing country like the UAE with 3.5 million barrels a day of production, with sites to grow that to 5 million barrels a day by the end of the decade. Should they hold the presidency for what is essentially how to phase out the very thing that we produce here in the UAE? But since then, nothing's really happened. And I
Well,
think that, it's that's a talking point just there, isn't it?
Well, I think there's a lot of, I mean, it's almost comes down to what country doesn't have some type of petroleum fossil fuel reserve, and so to cast shade on UAE, it's like saying, well, if Guaiana wants to be the next host of COP 29 or COP 30, well, I'm, they're developing all this crude off land and in on shore. That violate them or make them ineligible. Same with Namibia, with all the new crude that they're discovering in their country as well. I mean, so petroleum is everywhere in the world, and we still have to use it. And I don't think we're going to see it go away. I don't think transition is going to immediately reduce it. But again, we've been seeing this transition happen as I've you know hoisted my flag on the we're in peak oil demand today, but doesn't mean it goes to zero. It means just we plateau, we flatline from this point going forward.
Yeah, and do you know what? Just before we move on, because there's only so much my brain can consume itself with the renewable argument. I was getting onto good old crude oil in a minute, but um, when I went to Singapore, I got picked up here from my home and went to the airport in a rather splendid looking Chinese manufactured electric car called a BYD, which stands for something stupid like Build Your Dreams or some nonsense, which was quite disappointing. But the car itself was lovely. And, the driver, of course, I befriended him. He said it charges with a 550-kilometer range in an hour and 10 minutes. That's a game changer. And I think that what you will start seeing um, is you will start seeing the electrification of road vehicles come in and have a profound effect on gasoline demand at the pump. I think that will happen.
Well,
I'd
it's
argue
happening.
probably
It's
not.
already happening. It's not something.
Yeah, I know, but not in the Middle East with subsidized, you know, um, it, gasoline markets.
Yeah. Well, the Middle East is always going to have that. I mean, gasoline's still cheaper than water in the Middle East. So, I mean, why wouldn't it? But, you look at China, they've done a fair amount to electrify their grid and electrify their auto fleet. Europe, the United States. I mean, there's a lot of people who are crying the demise of the EV industry in the United States. But again, the oil, the major auto manufacturers, your Ford, your GM, they can't compete with what the Chinese are putting out. Tesla's having a hard time competing with what the Chinese are putting out right now in the EV market.
Yeah,
So
no, I know. Yeah, I know. I think what's significant rather than comparing it to because I don't think the comparisons to what is a fairly saturated, mature market in the West can be compared to what's happening in with China. But I remember a few years ago, and God, I don't know how many years ago it would be now. It was the old Top Gear, where Jeremy Clarkson, James May, and Richard Hammond were on it, and they went to China because the future of car manufacturing that you saw would be in China. This is probably 15 years ago, I would argue.
I
Maybe not that
watched
long.
that
Uh,
episode. I watched.
sorry.
I watched that episode.
Yeah, and it was a very interesting episode because they're very funny and the way they look at things, but how quickly the Chinese market has evolved. From a three-wheeler scooter with a basket on the back to the Hongqi, the Geelys, the Cherries, and now these are mainstream manufacturers. People down Shakeside Road, where your big sort of Shakeside Road is kind of is the main trunk road between sort of Dubai and Abu Dhabi, if you like, for those who haven't been, which is kind of a landmark in its right because you've got these huge sort of Ferrari, Maserati, Lamborghini garages, and they're kind of sort of siloed in between now Chinese manufacturers, and it's certainly a shift that I've seen in the last 2 or 3 years. So it's anyway, enough of bidding up the Chinese, literally BYDing up the Chinese. Let's talk about this breakout then from on Brent, shall we?
Well, sure. I mean, so the breakout happened on Thursday last week, Thursday, Friday. Friday confirmed the breakout. Monday, we had follow through from the U.S., and all this is being driven mainly on the Ukrainians plummeting Russian refining capacity as they try to push more of the war back against the Russians, onto Russian territory. I mean, something around 800,000 barrels of refining capacity has been hit, of which has impacted, depending on who you talk to, anywhere between 300 to 600,000 barrels of actual production.
Yeah.
Uh, So it's a pretty dramatic shift, and that has just added more fuel to the fire of the geopolitical risk that a lot of people weren't thinking about because it is new strike capacity that the Ukrainians have not really exhibited until recently. Now, it all coincided with the Russian election, so there's probably a political angle to it as well. But nevertheless, it does put into question the security of Russian oil supply when it comes to outside markets.
Yeah, I mean, look, it's we love a bit of context on this show. At the end of February, Brent closed $83.60. So I mean, whether that's breaking out of the sort of range we have been for the majority of the year, I'd say that's pretty much, where we've been. If I go back to the start of the year,
We
we
have to go all the
opened,
way back to November 8th because that's when this range started to get developed. It was in November 8th.
yeah, but my brain doesn't work past the 2nd of January 2024. So Brent opened the year at 77.39. We sort of traded around those levels. So the high of the year so far before this current where we've been have been around, let me see, around $84.30. And the 75.60, something like that. So it was no, we got no, excuse me, 72.29. Oh no, hang on, we're going to December. Ignore everything Stanley says, rubbish. 75 to about 83 and a half. So where are we now? 86.64. We're down a little bit on the day. I think you're right. I think it's probably a bit of, I hate using war risk premium is being bandied about quite a lot because there's so much conflict, unfortunately, going on right now. But it's clear that because of the agenda or strategy the Ukrainians have to target Russian refineries, Russian oil refineries. So we've got right now the effect on primary runs solely stemming from Ukrainian drone attacks is about 530,000 barrels a day over March and April, falling to 400 in May, with a knock-on effect to gas oil supply in the region of about 180,000 barrels a day over March and April, right? That's put pressure in the front. Has it put a lot of pressure on? I mean, it's worth at the moment about $4 a barrel maximum. Is that what you'd say it topped out at?
Well, I think that's a very good fair assessment, and it is a case that it is refining capacity, not oil export infrastructure that's been hit. And this is a clarification I think a lot of people got to think about is that primary products exported from Russia out of the refining sector because most of the refineries are fairly low in the complexity range, so they export about 40% of their run rate goes into fuel oil. About the other 40% goes into gas oil, and the balance is naphthas or NGLs.
Yeah.
Uh, and so, with the impact on gas oil, is also an impact on heavy high sulfur fuel oil, and also a small impact on naphtha. So, what you would expect to see is you would expect to see a reaction in the high sulfur fuel market, which there has been a move upward on high sulfur fuel cracks over the last 5 days. They've gone up, but they're more deferred than they are in the front. Same thing with the gas oil market. The gas oils with backwardation has increased here in the prompt, but not as much as you'd expect it to increase.
Yeah.
Yet the surprising piece is that when you lose refining capacity, that means you're sitting on excess crude oil. And so the question would be at this point is do the Russians actually export more crude to kind of keep their balances in check so they're not losing market share overall, but they just export more crude oil, which then puts more of an upward bias on um, products because if the Russian gas oil is not being exported to the market, then that gas oil's got to come from somewhere else, which then drives higher prices for crude feed into other refineries that are going to be brought online or made to process to feed the gas oil shorts that Russia's no longer covering.
Yeah. I mean, so what, you'd be a bar of cracks then, would you?
Oh, I would be not not that we put positions or recommend positions.
Insert disclaimer. The smoking barrel holds no responsibility for those who decide to act
Markets
upon
are
its
volatile in
counsel.
trades and what have you. But to me, it would be the being long high sulfur fuel or gas oil is probably the place you want to put your chips if you're on the table. At this
Okay. Riddle me this, Batman. Um, okay, so we got oil market sentiment is turning a bit bullish because of the Ukrainian drone strike attacks on Russia. Bullish for gas oil in the short term. Crude oil fairly negligible because it doesn't affect any crude supply. Let's move to shipping briefly. Bab el Mandeb, still very much a problem, just not in the news as much. Is that right?
That is correct, and you have majority of shipping companies avoiding. And
Because
even
I'm just
now,
looking.
that resulted in the Houthis to say that they're going to expand their range of attacks because they're losing fish in the barrel. The amount of fish in the barrel keeps shrinking. And what ships
Okay,
are transiting are more ships of friends, not ships of foes. And so they're losing effective targets to go after.
okay. Can you allow me to share my screen, please, Edwards? Because I want to show you just our map, just in terms of activity. Because we say this quite a bit in that news value has kind of lost. Well, it is constantly being repriced because
You should be able to share it.
attacks on what's happening in, say, in Ukraine. Thanks, I can do that now. Attacks saying what's happening on Ukraine. Attacks what's happening in Gaza. Still attacks what's happening because of the Bab el Mandeb. They're just not holding the news values that they used to, and it's a real strange one. It's I just want to. I don't know if you can see my screen here, Edwards. Can you?
Yep.
So if we just zoom in right here, I mean, obviously, let's just go into the Middle East first. I mean, this here was somewhat of a blur 4 months ago. So obviously, this is the Red Sea. People transiting up here through the Suez Canal into the Med. Obviously, East Med is what's being heavily avoided right now. And then this here is where the issues are, the Bab el Mandeb Strait here. A lots of the attacks really coming through, vessels coming down here. I don't have a screen that can compare this to what it was 4 months ago, but trust me, this is 90%, I would say. What's the right adjective here? Less busy than it was in, say, November. Um, I won't, because just because of client confidentiality reasons, I won't be able to hover over any of these boats. But this is a significant drop in activity, and
And
I'd argue it's becoming more dramatic. The drop off in Red Sea transits.
I would say
Um,
that if you wanted to put a comparison, go to the Straits of Hormuz,
yeah,
because
okay, let's move over here.
that's
Um,
kind of how the Red Sea used to look.
yeah, I mean, look, this is as busy as ever, but I think the best some comparison is what's happening around the Cape of Good Hope. And you look here, I mean, you can clearly see, I mean, you're a mariner, but you can clearly see what's happening here in terms of
Well,
flow.
even the ships going down the Madagascar Channel between the east coast of Africa and the west coast of Madagascar. I mean, that's
Here,
just
yeah.
the amount of vessels going transiting through there.
So this here, this is what you're referring to, Eastern Madagascar. Yeah, that's that. So that's a fairly new route or a
Well,
trodden path that's not there before.
it's always been there, but again, because of the rerouting of vessels, it's one of the shorter distance points to get through around the Cape of Good Hope.
To end up in East Africa.
Well, no, just end up into the either you go to the west or you go to the east of Madagascar, depending on where you're coming from. So the
Right.
majority of the ships to the east are the ones that are heading into Asia. The ones coming from the Middle East are going down inside of Madagascar to go down the channel.
Yeah, I mean that you can this. I mean, I'm being
So
somewhat.
you basically make the turn off of Ras Al Had, which is the easternmost point of Oman, and then from Ras Al Had you make a beeline down to Durban.
Yeah, I mean, look, if you just sort of look at it's quite crass that I'm looking at it, but just to sort of simplify it. But this area here, right, which is probably your deviation point, I'm assuming, whether you're going to go through here and down into the Suez, or you're going to go straight around the Cape. This here has never really been as profound as it is before. Am I right? Am I wrong?
Um, well, no, I think you've actually had more ship, that point and that deviation has changed because it has been, usually from there you'd go to south of Colombo and then angle up towards the Bab el Strait, which now you
Yeah.
don't really have that many ships doing that, so they are heading southbound as soon as they round Nicobar Islands.
Okay. I mean, look, there is no better tool than a visual tool as far as I'm concerned, and
And yes, all these points will be on a quiz that we'll have later. Where are the Nicobar Islands? Where is Ras Al Khaimah?
Yeah, no, but it is. I mean, it's you're right. It's funny, not funny, because people are looking more than ever at. Well, I suppose they never really realised where it all came from, how it got to A to B, or
Well, it's
the
not only oil, it's all goods. So it's not just
yeah,
oil, all goods that are shipped. There are pinch points around the world. There's probably a handful of major pinch points. And this is probably the first time, there's always been chat about the Straits of Hormuz getting shut down because Iranians do something, and you've got a major crisis on the oil markets. But we experienced what happened when the Evergrande ran aground in
yeah,
the Suez Canal, and how
ever given.
or
Yeah,
ever giver, and
yeah.
how that completely kiboshed freight markets around the world. So now you've got a true pinch being conducted in the Straits of Bab el Mandeb. It caused a big upheaval in freight, caused freight rates to go up across pretty much all freight classes. But now the world is kind of stabilized. The
Yeah,
markets
I
have
was going to say.
and
Yeah,
everyone's gotten used to this new way of transiting goods from east to west, or
and
the
then
old way of transiting goods from east to west.
there was an article the other week that said that one container operator re, had approval to go through the straits, but I'm not sure that was nonsense or. I mean, as an owner, what's your position hasn't changed.
Our position has not changed. As a we are avoiding the straits because we do not want to put our seafarers in any danger whatsoever. So we try to keep them off and avoid as long as we can and keep them out of that area.
Fair enough,
Now,
as
some
you
of the
should.
Chinese shipping lines, they're the ones that have been saying that they'll go through the Straits of Bab el Mandeb. Chinese container lines like Yangmen, but they also put on their AIS transponder that we're Chinese flag, Chinese owned. Um, do not shoot.
I mean, no, I'm not laughing actually, but yeah, it's so yeah. I mean, this is the thing. I mean, we've seen it stabilize, and we think that the sort of Matt Wright, our brilliant freight analyst, wrote a piece saying, it's settled at around 45% lower across everything in terms of the number of transits, and it's kind of it's stabilized there. Um, that's a I want to use a different
Well,
term.
I mean, you
You know,
still have the ships that are coming into the Strait, coming into the Suez Canal, and they're going to your Saudi ports or your Egyptian ports, and so they're not going through the Straits of Bab el Mandeb. So if you look at your map, you still have a fair amount of vessels transiting the Suez Canal, but they don't have a carry on through the Red Sea. They kind of stop off at a port, they turn around, they go back up north, back through the Suez Canal. So you just still have those transits going on. And you still have a lot of the price cap trade going through the canal and going through.
Do you think this has the long term effects? Is that it has a detrimental effect on global arbitrage?
Well, it makes arbitrage more expensive. I mean, this is part of the reason why I think gas oil becomes hyper reactive to what's going on with Russia. Because when you think of where's your excess gas oil capacity in the world, it's in Asia. I mean, that's where you have all these big mega refineries that can produce a ton of gas oil. But for them to get to market, if you're going around Africa, you're adding 15 days of voyage, so your lead time of supply is 2 weeks longer. So it does have a
Okay.
negative impact because that's more cost of goods on the water, which means you're financing for 2 more weeks than you were expecting to, and all that adds extra cost to the voyage.
Okay, that's a nice segue because we learned this morning that there's a mega refinery, Shandong Yulong, about to open in China, which seems to have taken a few people by surprise. I don't know why. It's quite a big project to build a 400,000 barrel a day refinery, but they started buying their first cargoes. Now, the way that the Chinese system works is that the government allow the refiners to a quota system, i.e., this is what you're allowed to export. That hasn't been known yet for this particular refinery. Do you think that's intentional because they might be having a look at arbitrage flow, so moving a cargo from point A to point B and trying to extract the most value to arb and a cargo from that basis? That they might be looking at the global sort of picture and thinking, well, what's the point of you exporting diesel? We've got enough of it in the region. You're not going to sell it into Europe because it's going to be too expensive to go around the Cape into Europe. Do you think that Do you think the Chinese government will look at this in a different light now compared to how they would have looked at it before?
Well, I think the Chinese government will always look at the refining sector as a way to control and contrive their GDP numbers. The more crude they process, the more GDP they produce. So, in one way, that's always one of their active levers they can use to manipulate GDP to the number that they want to see. We saw this back last year when they overran refining capacity and exported more oil to the market because they wanted to hit their 5.2 GDP target, which they did. And so I think the refinery suffers, this new refinery suffers from no import quota for crude. So until they actually have an import quota assigned to this refinery, they can't bring crude oil in. So they have to wait. So they can buy crude, it can sit in bonded warehouse, but before it goes from bonded to commercial, they
Yeah.
have a quota and they have to pay the import tax. And it's the same thing with the exports on the product. So if they don't have an export license, then all that product has to stay internal. And if China already is meeting all their internal requirements from the existing refining sector, they may not grant any, they may have to grant 100% export license just to get this refinery up and running.
Okay. Let me ask you another question. I'm putting you on a spot here, but I don't care. Um,
Bring it.
Das Bocas, Dangote, Centuo, Dukum, Alzor,
Port Harcourt.
Shandong Yulong.
Port
When was
Harcourt.
the last time, over our few decades experience, that you saw the amount of refining capacity come online in 1 year?
Oh, it's tremendous amount. I mean, refining capacities always come up and come down. But you have all these new refineries that are coming online, and then you also have a lot of refining capacity that's being shut down. So
Yeah.
you have to couple those two. So I mean, if you have the Irving refinery in New Brunswick, right, which is always up and down depending on what goes on, you've got the two inland German refineries that are going to be shut down in 2025, Grangemouth to be shut down in 2025. You've had the Appy refinery in the Med that's being converted to a biodiesel processing plant. Eni's Laverno refinery being converted to a biodiesel processing plant. You've got refineries in the United States which have all been shut down to convert to other production, mainly biodiesel production. I mean, so you do have a bit of refining capacity rationalization because at the end of the day, these new refineries are designed to build and make the cleanest fuels that they can, and they're going to be removing from the market the refineries that aren't as advanced.
It goes back to this weekly argument you and I have about um, matured economies where demand is dying, like Europe, and the Mexicos, the Omans, the Chinas, Kuwaits, where the middle classes are growing, demand is growing, and there is investment in fossil fuels. I suppose it kind of circles back to what Amir Nasser was saying in that, you know, fossil fuel investment is there. It's just not in the places that necessarily want fossil fuels to die, and
Well,
that's a concern.
well, but it's a case of if you're a growing economy, if you're a Nigeria, would you rather be refining your own natural resource within your own country and keep the dollars inside your country? Or would you rather keep going on doing the inefficient trade of exporting crude and importing products for the offshore refining processing deals?
Oh,
You know,
it's
Mexico is the same way. Mexico was a big importer of US products because they couldn't get the refineries up and running and keep them stable. So again, it's better for the Mexican government. Keep the dollars home. Don't let the dollars get exported back to the United States. Keep the money home. And so there is a financial incentive, I think, for oil producing nations to build and produce refining capacity because it helps them with their balance of trade and actually makes them in a much more effective way of managing their own economy because you're not reliant on the third party to take your raw material and bring in finished goods. You're doing it yourself.
absolutely it's a total no-brainer. Okay, look, last question before we move on, because it is interest rate week and we haven't even spoken about it. I wonder if one of the sort of growing superpowers now, global superpowers, Saudi Arabia's and UAE's, etc., if they look at a sort of lack of investment in fossil fuels or the energy space within a mature environment like Europe, if they come in and buy up a lot of these, I wouldn't call them distressed assets, but assets that people like Total, Lyondell, Basel, Shell, Petroineos want to offload if they come in and sort
I
of.
don't I don't think so because the regulatory environment is too strict and too stringent. And so why would you want to get involved in a if you're Aramco, get involved in a highly unionized refinery in the middle of Europe where you've got all sorts of regulations that are coming down on top of you, on top of everything else to try to make that refinery operate, versus build or invest in a refinery in China, which that's where it seems the majority of Saudi's investment is going to, is in Asia. It's not going into Europe. And
Well,
and I would
you know,
actually beg to differ that there is a tremendous amount of investment being done in oil and in fossil fuels. It's not being non-invested. I mean, you've got new oil discoveries being announced across the globe. Namibia, big oil find there on the inland basin. Exxon keeps finding more reserves in Guaiana, um, and I mean, so you can just keep putting those all over wherever there's any exploration going on. There are people investing, so it's not
yeah, I
like
know. I
invest.
get it. Guyana obviously is the big story that people have been writing about. That's. But I just wonder if the agenda is leverage, market share. Aramco are clearly on a path to the detriment of Arabian GDP, which has been dropping, to cut oil supply to keep oil prices healthy so they can
And,
reinvest.
and just to
Um,
say, wait. They're not reinvesting because they cut their investments. They weren't going
no,
to.
that
They were going
no,
to
that's not true.
production to 13.9 million, and they
Yeah.
cut it back. They scaled it back. So have the pot called the kettle black, and let's just move on because Saudi Arabia needs to dance to their own tune.
No. They said that was not off the table right now, but it's not completely off the table. But how they're reinvesting is
Yeah, and buying sports teams.
no, is what they're doing. I think a third of the world's construction is in Saudi Arabia right now. The Neon project, everything on the Red Sea. There's huge. It's probably
Well,
the
who's
biggest.
in this Neon project? Because you look at that, that's a tremendous amount of real estate being developed. For whom?
Well, build it and they will come, mate. Anyway, look. Um, let's talk about interest rates because I think the first time in 17 years we saw the Bank of Japan switch policy this morning, increased interest rates, not by much, within a basket of 0 to 0.1, but a fundamental shift. New
Well,
world order.
I think the fundamental shift in Japan is the fact that they're no longer going to manage the yield curve. I mean, that's been their biggest tool that they've been employing ever since they started going into deflationary. 20 years ago, their economy started going into a deflationary spiral. And so to give up that yield, let the yield curve now float, that's a pretty tremendous move. What has it done? Okay, the US dollar has gotten stronger versus the yen, which is an interesting move here. I think we're at $150 to the 150 yen to the dollar. So that's moved up about three yen.
Yep.
But nevertheless, it is a change in sentiment because they are seeing growth that's more inflationary versus deflationary. So they do need to kind of pull off a bit, let the reins loose on the horse, and let the horse run for a little bit and see what happens.
Yeah, yeah, I agree. I mean, it's not. I don't think the number matters in terms of the increase, but like I said, it's a shift. Australia kept things in check, kept interest rates steady. Inflation's too high.
Yep.
Um, it got the Fed meeting today and results out tomorrow night, and
Yep, FOMC
odds.
off, and I think there it's pretty certain that there'll be no change in policy at this point going forward. So just like in the last meeting, I think most people are going to be waiting for the memo to come out and for the
Yeah,
interview with Chairman Powell to see exactly what language they're going to be using to explain their moves going forward. But I mean, more people are dropping three rate cuts. Now there'll only be two rate cuts. I'm still holding that there'll be no rate cut this year. The Fed will remain things at this current rate until till probably mid 2025.
well, I'm not that pessimistic, but I mean,
Oh, that's not pessimistic. I'm just saying we're at a normal interest rate environment. Why do we
yeah,
need?
maybe, maybe. I
U.S.
mean,
inflation is elevated, so it still needs to come down, but the employment numbers look good. So the job market is steady, if not doing well.
yeah, no, you're right. I mean, US is plodding along and doing all right. I think if we don't see anything in Q3, Q4 is obviously the 5th of November is US elections. So we'll have to see what's going to happen there. There'll be something that will be priced in because people know where it's going. I think that you might see a nominal cut, but I don't think it'll be a dramatic shift in policy, maybe late Q3. But yeah, we'll have to wait and see. Things look steady, things look calm. So why not? I mean, I think there's something like 16 central banks getting together this week to talk about, fiscal policy, what they want to do, the outlook. But yeah, look, I mean, just wrapping up. I mean, 86.74, Brent's down on the day, not by much. Gas oil cracks are up a little bit. Cable's fairly steady. Okay, yeah. Look, I mean, just compared to where we were 3 weeks ago on Brent, things are a bit murkier because of the Ukrainian drone attacks in Russia. Brent has come out of its range by say $3 or $4 a barrel. I think it will be a struggle to break it above 90. I think unfortunately you'd have to see a lot more profound effect on
Well,
on
I think to get to 90, you need to have an actual strike against some export facility somewhere, uh,
yeah,
which takes it offline. I mean, that's where I think you see a gap up to 90 at that point. But until that happens, and you're the only place that probably will happen would be in the Black Sea.
yeah,
Uh, but you know that the Russians are probably concentrating a lot of their air defenses to ensure that does not happen.
yeah, absolutely. Yeah,
So So there you have it. You had a bit of macroeconomics, a bit of geography, and a
yeah.
bit of commentary on oil markets.
Renewables. We recovered Arsenal. The weather. I mean, We've solved every crisis.
I don't know if we solved anything, but at least we've put some questions out there. Well, we look forward to you. Anybody, quick click like and subscribe if you haven't done so already. Tell your friends, tell your neighbors. Shout out to Irene, our illustrious producer. Because without her, this program would be harder to put out than what it is already.
Yes, mate. Good to see you, everyone, again.
Thank you. I look forward to seeing you next week.
Ciao.